for me today. I'll probably end up taking some of that. This trade goes to Monday, Tuesday. If we're getting up into the high 67s, this should be offering some pretty good profits. So we'll take a look at that this morning, and end up having a good day yesterday. It was all about them butterfly spreads. How many of you took the call fly with me, the iron fly with me? My daily profit play trades didn't get filled. Okay, that's okay. I'll do the same thing today. I do want to really respect the potential push on the VIX box today because of CPI. There's going to be a large gap up. So it wouldn't surprise me if the market is possibly like pushing this risk to next week. So anyway, I'm seeing a nice little push in P&L this morning, which obviously I'm totally fine with. Let's see. Chat's open for everybody. Yes. Okay, good. Let's go. Good morning, traders. And here are some of our gaps and levels. So 6,800 is a pretty solid pre-market level. We're looking to open up about 0.6 to 0.7% higher. So here is the gamma that I'm talking about. Futures up 0.61. SPY, I think, has pulled back just a tiny bit from the gaps I was looking at this morning. It was up to 676. It is still at 676. So close yesterday, open today. S&P looking to open up a little bit higher than futures, actually. Here is ES at 0.61. SPY looking at 0.65. Let's go to SPX. Looking at an opening price. So a couple things I want to consider. The VIX has been smashed down below 17. VIX is at 16.55. What a crazy crush. 29 VIX to 16.5. Obviously, if we push into 16, sub 16, 15 and change, this thing just wants to keep going higher. So right now, current VIX, 16.55. Let's do the math. It's going to be just over 1%. 16.55. So about a 1.03% move. Now, there's two levels I want to be mindful of today. This is my VIX box starting at the close at 67.38. Okay, that's my reference point. I just updated the indicator. This should be, based on current VIX value, just over 1%. Okay, there's a 1.07. I think because we're having a large gap to the upside, I don't want to immediately fade this. I think that is crazy talk. I mean, if we gap open and, like I said, stay, here are the previous all-time highs, right? 67 and change. Now, as I've mentioned on the bigger picture, is it possible that today's move, is it possible that today's move is nothing more than a gap up into this broadening pattern that's going to hit heavy resistance? Is it heavy resistance at 6,800? That's my biggest gamma level. I think we can find it. If we're opening 0.66 higher, 0.66 higher is going to push us up around 67.80. Can we go another, 20 points or so? Probably. I mean, hitting 6,800 is still less than a 1% move from the close yesterday. So it's very gettable. So here's what I'm going to do. We have the gap open. I want us to be mindful of a 1.03% move. So not only do we have the move here, if we go 1.03, that VIX box high is going to be around 68.08. Okay, that's one level. Now, just in case the market's going to keep pushing higher through today, I would look at the gap open plus 1%. Okay, so if we gap open, I'll kind of get a rough estimate here. So let's say we gap open around 67.80. From 67.80 up another 1%. Okay, if I'm going to sell premium today, I want to get filled and this thing like rips. I don't think we go too much higher than 68.50. So I don't mind doing like 10 wide, going for like $1 or $2 credit, trying to get filled on those trades. I know there's some risk there, but that to me is where I'm kind of safely calculating the highs. So that's well above the 100% ATR based on yesterday's price action. But we had a news event that the market was highly anticipating. It finally came out and it wasn't as bad as what they thought. So what this kind of reinforces is that the Fed is going to continue to look to cut based on softening labor market because inflation is not running away. And I also said I wouldn't be surprised if inflation is lower because we've seen oil prices hit recent lows. And typically we have energy prices that for core CPI is excluded, but for headline CPI, energy prices typically lag, shelter prices certainly lag, and those are two major factors in the headline CPI. So oil prices have been down, rents have come down, shelter prices coming down, and that lag effect. I wasn't surprised that we didn't have runaway inflation. So we are seeing that the Fed can still have room to stay somewhat restrictive, but also cut rates. I want to see, like I said, more importantly, is that by the end of the year, while we're cutting again next week by the Fed and probably cutting again in December, that the U.S. 10-year, I'd like to see it continue to drop. Okay. I do have a concern. I think we need to pay attention to this. I do have a concern if the 10-year starts to go up. That just shows that, look, the policy is going down, but the Fed, like what this chart shows us is that if this goes higher, the Fed has absolutely zero control and zero influence on the long end of the curve. And what that kind of looks like is we are essentially financing $38 trillion in debt with very, very short-term treasuries. You know, we're talking like 3-month financing, 6-month financing, 1-year financing. Like max is like 2 years. That's the short end of the curve. That's what we can control. The long end of the curve, if this goes higher, mortgage rates don't come down, refinancing doesn't come down, everything gets sticky again. But look, in the short term, I could see us maybe poking this level here, maybe poking this level here. If there is a technical trade here, I would watch for those levels to offer bounces. Okay. Look, I'm really interested in if we hit this level here or hit this level here, I'm probably calling up my mortgage team and saying, look, what are we at for refi? Because it was 6.6 here. If we're down to 3.7 and I can get like a 0.75 basis points off, if I can get this down to like, 5.7, 5.8, maybe I could, I don't want to buy it down. This is going to take more time to pay off the refi. But if I can get close to 5.6 or lower, that does save quite a bit of money. That could probably help us trim. I don't know. If we pay the same amount we do now, we're putting that much more towards principal. That could probably help us save another 3 to 5 years on a mortgage. So if we get there, and this is what I'm tracking, pretty close, you can see the alarms, alarm there, I'm watching. So long end versus short end. I think ultimately this is a big, look, I want to see this go down. I want to see this go down. I want to see mortgage prices come down. I just think that the concern is either house prices stay really elevated and higher, mortgage prices or mortgage rates come down. Great. But part of me thinks it's going to be the stickiness of both. Nobody wants to see their home prices come down, but you can't have both. You can't have a housing market that's 6 times salary and expect this to be sustainable. So something has to give. Either home prices have to come down or rates have to come down. The government obviously wants rates to come down. It's not declared emergencies yet. If this is cooperating and the long end of the curve is actually declining, that could be a good thing. But I have seen very, very few outlooks on this that are good. Mostly this is because of what happened in 2024. This broke a 40-year trend. So my concern is that this repeats, is that we start to see the long end of the curve going back up. So that to me is like the sign of caution going into 2026. But for right now, we're looking to be opening higher. I will be checking that calendar spread today because if we're up into 6,800 plus, that should start showing some decent profit. And let's see what that looks like. I had a trade on this one that was like a $680 debit-ish. Let me double check. I've got the calendar spread here. So calendar spread, SPX, there it is. $6.90 debit. Hopefully by today's open around like 67, 80 or 90. If this offers up some profit, even if it's, I don't know, 10, 15, 20% of that, I'm pretty happy with that trade. So we'll see what it opens up at as we're getting like towards that profit peak. Should look something like this. One of these profit peaks. So if we're opening up higher, 67, 70 or so, this should be offering some profit. Today's going to be the 24th. So I'm going to shift this to the 24th. Okay. So that shifts up my P&L. This has to be showing some profit today, I would hope. We're getting out of that saggy dead zone. And come on, man, give me a couple bucks, would you? Calendar spread. I know. So 2 things, right? The calendar spread, the way that I did it here is it's the call side and put side. All this means is you get the benefit of 2 things. Either one, price is moving higher, price is moving lower, or you have a volatility expansion. In this case, we don't have a volatility expansion. We have a volatility contraction, but price is moving. So between today, if we're going to push and try to make highs for the day, try to push to all-time highs for the year again, hopefully we're getting up into this profit trap where I can start taking some partial profits today. So hopefully this offers a few $100. Okay. All right. I'll pose the question again. How many of you are in the trades with me yesterday for double ups. I posted that in Telegram. The call fly was a pretty good manager into the close. So it was offering, you saw me updating here. Update. So 326 butterfly call spread showing 520 credit. This trade was $1.05. Okay. 1.05. It was a 1.05 debit that was trading for 520 credit. That also became a 590 credit. That if you let it settle for the day, 341. Now I managed to trade a little bit earlier. I managed for net profit. I went 305 credit, made $200, and then I lost 60 or 70 on the other trade. So net positive on the day. So I give back like 60, 70, make 200, and I'm net positive on the day. Like I managed it. Actually, I was set to take profit, walked away. And it was 190% winner with like a 69% loser. So net positive. And that was good. If you watched and managed a little bit, further into the day, that was the beautiful thing about like, okay, the left and right side of the butterfly spread shrink in towards your strike prices, but the profit trap grows in the middle later in the day. And I mean, that's a great trade. That's a great trade. Having a dollar debit turn into over $5 credit, that's pretty good. It's pretty good. So anyway, hope you managed it pretty well. Even if you made a couple bucks on it, certainly better than nothing. Okay. So let's get after today. Market opens in about 13 minutes. Let's take a look at a bit of everything. We had earnings. So Tesla had a pretty good pop. It's probably back up into positive territory. Pre-market 446. I did take profit. Newsbreakers, we had a small winner yesterday. We were down to 420 on Tesla, and we needed like I want to say it was like a 442.50 by 445. So the fact that we ripped this week on Tesla got us back into positive territory. I took the winner yesterday for like $20. It's not really exciting about the winner. It's the fact that, it was clearly a loss of, $1.30, or I'm sorry, $1.20 was our debit. So it would have been a full loss if we didn't do anything in Tesla. But the fact that it ripped up here, I need price today. If you're still in this trade, if you didn't close it with me, you need price today to stay greater than 445. If it stays above 445, then you have a $1.20 debit that can trade and fill for a full 250 credit, which gives you $1.30. That's over a 100% winner. But you need price to stay above 445 today, the entire day. And maybe it does, but within a weekly trading range, that's a lot of movement. And just in case some of it is given back, I didn't want to take the chance, so I took the trade off yesterday. Intel, I posted this for Newsbreakers as well. We're up to 40 plus pre-market. We need price to stay above 37.50. This one's going to be close to 100% winner. I did put a take profit this morning at 0.445. So that's a 90%, or I think 90, is that 90 or 95%? If I take 45 out of 50. So that's a 90% credit winner. We'll see. I mean, I think it should fill. But again, are we going to fall, $2.50 today? I don't think so, but I also have no idea. If we gap open on CPI and the market just tanks all day, everything could fall with it. I have no idea. So to be safe, I'm just putting the take profit at 45 cents. I think that gets filled rather than trying to wait for the end of the day to get filled at the full 50 cents. We took a few contracts in Intel. It was a $37 by 37.50 debit spread for Newsbreakers. Worked out just fine. So hopefully we get some profit in on that today. Okay. All right. Gave up on Tesla, sold to get a few bucks near the lows, took the loss. Rob says, lost more on the low, I made on the high. So how so? Did you trade bigger? I mean, it was like one was risking max of 130. The other one was the max risk of 105. I mean, are you talking about the spreads that I did yesterday, Rob? I mean, if you're going to take multiple spreads like that, you're trying to manage them for net profit. There's two trades. You got to give them a chance to let those winners at least add up to make up for the cost of the day. I mean, the price action yesterday stayed in longer, lost on the low, made dollars on the high for 2 net profit. Then you should have still made money though, right? I mean, if it was one contract each, it's like one was a max risk of $1.30, one max risk 105. You made $2. Okay, yeah, well, that's good. All right, I was reading it like, lost more. It's like, well, all right, I'm glad you made money. That's the point. Okay, so Intel looks good. Tesla was a winner. Newsbreakers said it was fine. We got some pending orders that we'll keep an eye on. For today's trades, like I said, I'm going to be a bit more on the cautious side. I think if anything, we're likely going to have with the news actually coming out today. I think the market loves it in some way, shape, or form. I don't know if it's going to be one of those days where, look, it's Friday. The news came out for the first time in weeks. We've had nothing to really cling on to data wise. So does the market, gap higher and fade hard? Does the market gap higher and do nothing because it's just thrilled about a positive news event? It does the market gap higher and also push higher? I don't know. I'm going to be, conservative today just because it's been a good week. If I'm going to sell, I'm going to do the kind of conservative play, which is we gap up and then I take my VIX move, because when we see these really aggressive days, you have the gap and then you take your VIX box on top of that. So I'm going to calculate the extra, 1+% just above the gap. So rather than trying to sell the VIX box here or the 100% ATRs, I'm going to go out of the way. One trade I'm going to be managing today, hopefully for profit, is going to be my calendar spread. And that was a 690 debit. I'm hoping I can close that for like 790, 890 credit today, hopefully more. I put in a take profit at 1090 to go after. That's a pretty good return. But, those trades usually for a 690 debit, that trade offers up potentially, $2,000 on one side or the other. So if we're getting close to 6,800 today, that's my point, is like, this could be a pretty good looking trade, at least offering me something in the, maybe $200, $300, $400 profit, hopefully. So we'll see what it does. All right. Just checking my box. All right. So opening here in 8 minutes, looking at some fresh highs pre-market. Things are looking good. Let's take a spot check elsewhere. We're probably going to see a lot of green in the market at the open. Question to me is, does it hold? Does it hold? Right? Previous all-time highs were gapping higher than those levels. Do we hold? Like I said, I am watching price action for this reason. If this is a breakout pattern, then we are possibly pushing up into 6,900 plus with no disruption. If this is a broadening pattern, I am cautious coming into today's highs, because we can get up to these highs, everyone's excited, and then that 50 period has not been hit yet on the SPY or the Qs or the SPX. And my concern is that something happens where it just gives it back. And maybe that is the correction. Like this market fell, 3%. So does it come up here to fresh highs and then drop like 4 to 5%? Again, to me, this is potentially noise as long as there's no major disruption to, the further downside. But, look, I'm excited that the market is up, but I'm also cautious that it's going to fall back down. And it's not like, oh my God, we're going bearish. It's just there's technical noise. This 50 period hasn't been hit. So anyway, I want to see if I'm getting some dips elsewhere, gold and silver. We got a couple of dips here on gold. We have a couple of dips on silver. I got filled on some silver positions. PHYS was in. CEF, I don't think I got filled on it. Nope. So CEF is actually gapping higher, pushing lower. If we hit fresh lows, on CEF, I'll start getting a couple dollar cost average levels in for my project options edge. Okay. All right, so we're going after some trades today. Hopefully yesterday was a good kind of overview. I didn't, talk about anything. Today I'm going to spend some time towards the end of the session on daily profit play. I do have a masterclass today at 1 p.m. Eastern time, so I want to make sure everyone knows that. Daily profit play masterclass at 1 p.m. Eastern time today. Okay, all DPP members, welcome. So we'll discuss the DPP indicator, core strategy, and we'll probably go for like 60 to 90 minutes. And again, bring all the questions you want. If I've got brand new, okay, so new and OG members. It's a community that's almost 1,000 members. So we've got traders that have been doing the daily profit play with me for over a year that are killing it every single day. They pop in these classes. They're a great sounding board for reassurance of like, you're in the right strategy. This stuff works. And, we're trying to make money every day. We're trying to make good decisions. In a 0-day environment, you can't really afford to make bad decisions. So the nice thing is you are aligning yourself with some of the smartest, brightest, deepest pockets in the markets, which are market makers, and doing what they do best. Okay. So check it. So yeah, what you want to do is check your so your one click trading. So your DPP one click trading. Check the alerts section, and it'll have the classroom Zoom link. Okay, so that email will go out shortly before class. So 1 p.m. each time today, we'll probably have it sent out within 15 minutes of class or 30 minutes of class. You'll have that in the alert section. Okay, of course it'll be recorded. Of course it'll be recorded. Yes. Yep, we'll record it. And the class will be posted inside the masterclass and training section of your classroom. Okay. Is that a free class? No, it's for Daily Profit members. So if you'd like to get into Daily Profit Play, I'll talk about the end of today's session. It's pretty easy to join. It is prosperitybub.com/100. And I'll talk about that a little bit later today. Okay. If any of these services you want to be a part of, give our team a toss an email to them, support@prosperitypub.com, and you can ask about any of these services. Okay. All right. Good stuff. Okay. 4 minutes for the open. Daily link for daily. And I'll do this too. I will post in the Daily Profit Play for members. I will post the Zoom link here. So you'll have it in the classroom in the alert section, but I'll also post it inside your Daily Profit Play Telegram. So when you get the class today, if you're a brand new member, jump into your classroom. It's in our one-click trading member portal, and get your Telegram access for the members alerts. All right. And I'll post the Zoom link today as well. Cool. All right. Okay. So gold, silver, Bitcoin, things are up. Not bad. I've got some pretty good P&L in the beginning of the day. I'm curious, just like you are, what happens today. Do we gap higher, go higher? Do we gap higher, stall? Do we gap higher, fill? I don't know. I think that this being the first news we've had in literally weeks, the market might be pretty excited about it. One thing I could consider on the day is a reverse iron condor. I still don't love the trade, because if I can't get filled, $20 wide dead zone for a $6 credit, I probably won't take the trade. Plus or minus on the day. Let's take a look at this really quickly. So let's go SPX. Today we're looking at like a 38 to 39 point move. Well, we're going to get a much bigger move than that just based on the gap, right? If we're gapping up 0.6%, there's a 40-point move on the day. If we're gapping up 0.6 and change, we're already moving 40 plus points on the day. So I think what we need to consider is the price action for the day is if we're gapping here, there could be a plus 40. There could be a plus 40. That would be if the market makers do their job. Okay. Obviously, if risk continues to there's risk appetite galore today, then we could stretch higher than that move, and market makers roll that risk over into Monday, and we try to get up as high as we possibly can. Again, I don't care. It's like, this is a good thought. This is easier trading than watching the market tumble 3-5%, 5 becomes 10, and everyone's panicking with a VIX at 30 or 40. It's a lot different when the market's just going higher. Earnings have been stellar. Very few data points to go off of, but today's CPI is nothing that's scaring the market. In fact, it just kind of reinforces that the Fed's going to continue to cut, cutting mostly because of labor market, and therefore inflation. The inflation story is actually okay. Okay, PMIs are going to go up. I mean, PMIs at 945. I wouldn't be surprised if our PMIs go up. Global PMIs are also on the rise. So we do have data coming out at 945. But let's see what the market does this morning. Yeah, Kirk, I mean, the trades that we're in for pinch point are in with take profits. They're really low maintenance trades. I mean, there's not much we have to do. Expiration wise, I don't think I have a ton. I think we're all pushed out until later part of the year, right? So DTEs, Intel, that's for newsbreakers today. SPX, that is my calendar spread for Monday, Tuesday. Crocs, we have one out to October 31st. I mean, we're in a small profit on Crocs. Pinch point here for November. I mean, we don't have a ton of expirations on pinch point that are near term. Crocs at the end of the month. That's next week. So we'll keep an eye on that one. Okay. Intel news. I should be getting filled here hopefully at 48, 49 cents. We're trading at 40 plus. We need this thing to stay above 37.50. So either it fills me at 48, which is most of my credit, or I let it expire for full profit at 50 cents and I'm up 25. I got filled for 25 and make 25. That's 100% return on risk on Intel. Looking pretty good. All right, let's go SPX. Let's get our levels. Oracle. I don't know. I'm skeptical of Oracle. They just took out like $40 billion to build data centers. So I don't love Oracle. I think the demand is there, but yeah, I'm holding off on that stuff, man. I mean, if I'm doing Oracle trades, it's going to be, go back to April lows and just sell like a longer. I don't know. I'm really skeptical like these crazy valuations. So, I mean, if you like it, like if we get a gap fill here or we have some type of pullback, a bull call spread to me is probably the safest way to trade it. Just it's an option trade. If we have a orderly correction, the market finds support, rallies into the end of the year. All you need to do is get price above your line in the sand, bull call spread. That to me is a good looking trade. So we'll see. All right, let's go SPX. Let's get our levels. So we are gapping higher, 67.81. Okay, 67.81. Hopefully the market will hang in there today. Let me take a look at my calendar spread. That should be offering some profit. Hopefully it is. Let me go back to this. SPX calendar spread. This baffles me that like this thing should be showing some friggin' profit. I do not want to have to wait until Monday, Tuesday to manage this trade. It's down $55. Most I can lose is 690. I mean, part of me wants to just take the small loss. I don't know why it's showing. This has to be like incorrect, but I'm showing a 645 credit. All right, I'll just hang out, man. Hopefully the market wants to go up today. Let's get a read. So I'm still going to go up. Where's my pinch? I'm going to go up to my pinch. My VIX is at 1648. So 1648. We're looking at like a 1.03% move. I know this is way out there and we might not get filled on this trade, but with this gap higher, if we go another 1%. So take the gap, go up another 1%, a 68.50 or 68.55. Okay, so I'm going really conservative today, but I'm going to go 68.55, 10 wide for $2, and then a 68.60 by 70 for $2. If we get a big fat rip to the upside, that is gap open plus another full VIX box high. Again, I don't think the probability is high that we get filled on the trade, but the probability of winning that trade if we are filled is extremely high. Okay. So, yeah, I mean, we had a pretty substantial move today, like 0.65% higher, and we'll see what the price action gives us. Okay. So market's already checking off the box of reaching all-time highs. Like I said, I am a bit skeptical of this potential broadening pattern that we end up poking a little bit higher, but it is a fake out. And I'm mostly thinking that because this 50 EMA has not been hit yet. So do we go a little bit higher today, maybe run into form highs for the week, and then next week the market gives something back? Do we have data next week that's coming in? I don't know. Do we have non-farm payroll on the docket? I know we have the Fed rate decision. I think that the December rate decision is more likely to be, if the market's going to tumble on a rate decision because it's all priced in, I think it's more the December rate cut than it would be next week. But we will see. Next week, I'm not sure what we have on the calendar. Core PCE, yeah. So we have Fed FOMC with press conference, right? Rate decision, so rate cut and press conference plus PCE. So we have Bank of Canada looking to cut another 25 basis points. Fed looking to cut 25 basis points. Bank of Japan looking to stay the same. That gap fill still hasn't happened on the dollar yen when we had the surprise win from the prime minister. That is really going to possibly implement Abenomics all over again, maybe. I still think in time, like give the Japanese yen like 5 years, I feel like you're going to see this crazy move of strength at some point. I hope I can just find like an FXY or a currency position that pays really, really well. GDP numbers next week on Thursday. ECB looking to hold rates the same Friday, here's your core PCE. And then on the 29th would be Wednesday FOMC. Yep. So 29th FOMC, Thursday GDP, Friday core PCE to finish out the month. And also, yes, you have Mag 7 earnings, Apple, Amazon, Microsoft, Meta. I think Google's in there too. So big earnings next week. Google is Wednesday. So Wednesday, Thursday, big earnings days. And Google's up to some fresh all-time highs. Apple's just off of all-time highs. Amazon moving up. Broadcom. Google's creeping up there to all-time highs. Meta, earnings next week. Probably all about earnings next week. Microsoft, pretty well supported. We had a huge exhaustive gap here on earnings. We pulled back to the 50-day, earnings. I like the support in here. If we're gonna have a rough earnings, that's not gonna be good for the stock market, obviously. Having a company that's almost $4 trillion, drop that much, but it's pretty well supported. I think to the positive side, though, is you get a push right back to highs. So Microsoft just has that little bit of a blip. It pulled back like 13%. So getting back to highs, I'm sure that'd be a pretty welcome move for Microsoft. Netflix. We have a pending order, like a 1075 by 1080 on newsbreakers, trying to get filled on that pullback. Nvidia earnings are not next week; it's out to November. But still watching this one. This is all about your semiconductor space. Tesla. This is why I took profit on Tesla, because that was a big move yesterday, and we had some profit, so I took it. So I turned a little bit of profit. It was like 15% return, but I didn't want to give it back, because if we just gave back a little bit, like literally a couple dollars, we'd be at risk today. So took the trade off on Tesla yesterday. Bonds fading a little bit. Mags range highs. Okay, so Mags is up. So I just looked at literally every Mag stock. Like Google's the only one that's at all-time highs. So, but collectively, it's like the Captain Planet trade. They just like put their fists in the middle with all the rings, and Mags goes higher. Okay, Pete just got in the trenches, did a little bull put spread, got paid on that. Nice. Oh my gosh, look at this thing. So we're already pushing 6,800. Okay, so we've got 6,800 here, the 100% ATR. We've got 6,825, like kind of gettable levels today. I don't know how this calendar spread is not showing profit. This seriously is so confusing to me. Like I'm literally getting close to my pin price on the call side. Like what the F? So this trade collectively, so the sell puts in profit. It's I guess it's that stupid expensive buy put costing me an arm and a leg. Super annoying. Um, hmm. I think the put side was just so expensive. It's just not giving me what I want. Let me see if I hate doing this, but I'm going to see if I can get out of here for break even. So I'll put it in at break even. We're at the levels that should be looking good. Like if we stay around 6,800 today, 68 and change, it should be a trade that is profitable. But looks like that put side with the vol crush is possibly leaving me out to dry. All right. So, like I said, market's pretty stoked today. If we want to go to the option chain, take a look at some just straightforward levels. Let's go to the 24th. So I've got the 50, 55 and 65, 60 and 70 bear call spreads pending. Right now, they're trading for very little credit. Again, it might be another one that's not filled. I'm just being super conservative. So we run right up to 68. This is kind of the tell for the day, right? We have PMI, yes, in a few minutes. Previous all-time highs, okay, and a gap fill. So if the market doesn't care about any of that, then we probably have some risk next week to look out for. Just as far as like just the markets coming back and maybe testing that broadening pattern. I'm watching that high pretty carefully. But my job is let's not call the top and get blown out. You know, the bottom, obviously, if we moved all the way back down to fill the gap, that would already be a bigger move than expected. So unless today is like extremely boring, maybe there's a way to get like a 10 or 15 point dead zone and actually make a few bucks here. Like 68. Let me flip this around. So if I do like the 67, 90, 95, maybe the 05, I mean, that's 570 on the day. That's 6 and change on the day. Like, this isn't a bad trade. This is 20 wide. See if we can get here for like 615. If I get $6, I'm okay with the trade. 610. All right, just got filled for 610. So, all right, I'm in for a trade for daily profit play. Intel just closed out for 48 cents. Newsbreakers is a winner. Okay. Newsbreakers. Trade management. Intel. Entry 25-cent debit. Close 48-cent credit. Nice win. So that is 48 minus 25. 92% return. Okay, Deanna, that's coming your way. All right, trade is in for daily profit play. Inverse iron condor. Today is the 24th. 67.90. 67.95. 68.10. 68.05. $6.10 credit. So I have a 3.90 max risk, $1.10 max profit. Looking for price to be greater than 68.10 or less than 67.90 for today. So looking for some direction. We also have PMI coming out in 2 minutes. So the combination of CPI, PMI, do we go higher, do we go lower? I just want to see some direction. Just posted it. Yeah, I hope so. I hope that like volatility crush will be good. Just to let me realize some of the gains. Realize some of the gains on that calendar spread. What I don't want to see is price fall all the way back to like 67.50. Right? Not this one. This is the DPP reverse iron condor calendar spread. I'll try to at least make $100 here. I should be making a lot more than that, man. It's like when you're at these pin prices, you should be able to hit 15, 20, 25% take profits. What is 100? So 100 out of 690. It's only a 14% winner, dude. I mean, we'll see. I'll keep an eye on it. PMI's in 1 minute. Rich, you good on that trade? I posted in Telegram for members. So we're doing a reverse today. So I need price to either be below 90 or above 68.10. And since I got filled for 610, I'm going to set this thing max profit is $5. Like I'm in for 610 credit. I can close it out for it'll automatically close out. If price is above 68.10 or below 67.90, it'll automatically cash settle at $5, which gives me $1.10. So if I get like 550 560. I'm actually okay with that for a profit target. I'm going to go close at, I'll go 560 today, try to make 50 bucks. PMI, I'm seeing pushing just a little bit higher today. So set a take profit here at 560. Let's take a look at the news for PMI. PMI, so services PMI came in higher. Previous revised 53.9 to 54. Forecasted 53 came in 55. That's good. Manufacturing PMI came in solid as well. I mean, these are both growth. I mean, greater than 50 is good. Growing is good. So, how was the global PMIs? Germany up, Eurozone up, UK up, France was down, but US PMIs up. Okay. Markets are pretty pumped. Futures up 0.86, SPY up 0.88, SPX up 0.9. Okay, hitting that gamma level at 68. Does it have room to get higher? Calendar spread's improving a little bit. For our daily profit play, I'm just asking for price to give us something, right? Either price is going to make its way up into some pretty big extremes with the CPI data today, or even if we came back to like test the opening level and maybe even eat into this gap a little bit, that would be, profit up here for our inverse iron condor, profit here. Okay. So I'm just trying to stay out of the dead zone. Market maker range was pretty tight this morning. It was only like 38 to 40 points, even with the CPI data. It's probably less now because we're into it for a couple of minutes of trading. But market maker was showing about 23. It was like 38 as we went into the open today. It was about 38 points. Top of the hour 10. Yeah. Okay. So bear call spreads unlikely going to get filled unless this market just has like a ripper of a day, which again I'm okay with. But that's a high probability that we won't hit higher than those levels. We don't need to get to those levels to get filled. Like if we go to 68.15, 68.20, it's possible we get filled on these trades if it's early enough in the day. Right now it's we're getting 5 cents and 3 cents, so it's not a trade that's looking good as far as the fill. It might not get filled, but for the reverse iron condor, I'll manage this one. If I don't like, if price just seems really calm and it's not going anywhere, then I might just take like a break even trade, maybe a $10 loss. I'm okay with that. Like I'm always okay taking like tiny little losses on the inverse iron condor. But if we start to see like prices either continuing to steadily climb or we start to gap fill, I mean, just keep an eye on it, right? The gap fill to me is that broadening pattern that I talked about. Like if all of a sudden we're talking about this in the next, 30 to 60 minutes while we're together, if this is what the market does today, comes back down, maybe gap fills, then that's the broadening pattern. If you go out a little bit higher time frame here, okay, that would be connect the highs and connect the lows. Like that's the trickery that I'm looking for. So there's room, there's room to possibly push up here and kind of get a big upside surprise. Previous all-time highs right in this area around 67.60. Okay. So keep an eye on that. But, to be bearish, you got to break that trend line. Makes sense. I mean, to be bearish, this market's got to crush all this, break this low at 66.50, and then there's room to fall back down. But until that happens, this is a gap up, market's up, see what it does for the day. What was the high and low? What high and low? I mean, I'm calling the high today based on the VIX box, not my VIX box here because of the gap, but I took the open and then put my VIX box on top of that. So I'm doing like a 68.50 high today, which, maybe we get there, maybe we don't. But I'm just talking price action because we had an open right here. We could have the market gap up, pull back in, try to, test some of this level. If the market is going to bounce from there, let me see where our positive negative gamma is. It's way down here at 67. We're in positive gamma territory for a long ways today. So, I mean, the market would have to drop. It'd have to do like a complete 180 today. If we're filling this gap, we're dropping 7%. We're dropping over 1% to come back to negative gamma. So that'd be a terrible day if that happens. So maybe just a little bit of a pause. See if the market just wants to be excited about something. Positive news, loves the gap. We've already blown through the expected move based on the close yesterday into the open today. We've already made that move. So now the plus minus 30-ish. Open up at 71. We hit 68. We've already moved 30 points on the day. So now the question is, are we going to, get a little bit higher? If we can, great. Market makers roll that risk over to next week, perhaps, and we get paid on the reverse iron condor. There you go. Got filled to 610. That's good. That was my trade too. I'll keep an eye on it. If I don't like the trade, I'll close out for a small loss. But loss should be pretty minimal today. I'm not going to let that thing get into a fat dead zone. Well, if you're in for a 610 credit, just go in and take the exact same trade and set it for like a 550 debit. That's what I'm doing. The exact same trade. So the tickets to have the order in for credit, set the exit for a debit. We're trading the index. We're trading SPX. So it depends on your broker. Sometimes it's SPXW. Sometimes it's $SPX. But I'm trading the SPX, so the S&P index, which is different than the SPY, which is different than, XSP is another cash settled, but it's like the mini version. So I trade SPX. Every major broker should have that as a tool, though, as an asset. Okay, we have consumer sentiment at the top of the hour. Bonds are breaking down, put pressure on stocks. Not really. Actually, bonds breaking down shows there's more risk appetite coming into stocks. So I think bonds breaking down is actually a good thing to kind of keep stocks up. Bonds caught a bid with this last couple of weeks of uncertainty because it's like, well, rates have been going, or yields have been going lower, bonds have been going up. They've caught a bit of a safe haven bid. Dollars been up, bonds have been up. But it's funny, the stock market didn't really go down. I mean, if you would have told me that the VIX was going to go from 16 to 29, I would have thought the market's going to be down probably 5 to 10%. But it was down 3%. And then it never took out the low. This one-day move, it never took out a low. That is some resiliency. Dave, for the reverse iron condor, I set it for 550. So I'm in for 610. I set it for 550. Yep. Let me put that in Telegram. I'm going to look at a 560 or 550 debit to exit for profit. It's in Telegram now. Okay. So while we are at it, let's see what happens on the day. We'll sit here and talk a little bit more about daily profit play. Today at 1 p.m. Eastern time, master class, daily profit play. Come one, come all. If you are interested in trading every single day, daily profit play is a pretty great service because we're here every morning, placing trades every single day. I'm looking for high probabilities. We've been winning about 90% of our trades. Model portfolio shows 75K in profit with the standard risk every trade. Okay. So if you like the day trading, Some of you might be like, well, I've got pattern day trader rules. I only have, that's fine. In 2026, pattern day trading goes away. I don't know if it's going to be literally the first part of the year or like Q1, but pattern day trading should not be a thing for retail traders in 2026. So something to look forward to. So if you want to trade every day, daily profit play is a great way to do it with high probabilities. Okay, good systems, good mechanics. Waterfall income every week. We still have a couple more trades, hopefully closing out here. We took a winner on the SPY. I've got another like one trade on the SPY, two more trades on the QQQ that are looking good for some profit in the next maybe couple of weeks. We only have a few more cents to go for our profit target. Newsbreakers had a winner on Tesla this week, winner on Intel, some pending orders, double ups. Overall, great week. We took the two flies yesterday that worked out nicely. Pinch point, we've got some set it, forget it, swing trades with the take profits already sit. We had VRT hit this week for profit. That was a 50% return, which is perfect. I don't think I had one trade filled on Project Options Edge. That was my dollar cost average level on PHYS. That was it. We've also had, when the VIX was up to 24.25, I was selling premium. We've got over $550 of premium on SPY, QQQ, and Project Options Edge. That will be by the end of the year. So by December 31st or January 16th, we've got about $550 profit on Project Options Edge. 99.5% chance profit. Not too bad. All right, so daily profit play today at 1 p.m. Eastern time. I mentioned this yesterday. I'm making a push for our team to get this practical options course inside of your one-click trading classroom. There is a quick guide class for $27. There is a full course that I sell for $497. It is 13 of my favorite option strategies with a PDF and videos. This one is 6 easy to follow strategies. And it's basically you want to be bullish or bearish, you trade, the quick guide. So buy calls, buy puts, bullish spreads, bearish spreads, total of 6 strategies, about a 30-page PDF on that one. I'm putting this inside of one-click trading as a standalone classroom. Reason why is if you buy any course of mine, if you buy any course and you upgrade to a lifetime of that course, I will give you my full practical options, which is a $500 course included as a bonus. But what I want to do is rather than include all this inside of your classroom, I want to make practical options its own class with all the videos and strategy guys. So you have your access points. Okay. Greg says took the 67.50 butterfly yesterday in at $2, out at 5.15. That's awesome, man. Love that 100+% winner. Very good. Cool. All right, let's do daily profit play. Hope to see some new students this afternoon. Hopefully see a big fat class at 1 p.m. So quick reminder, we develop tools and strategies to the best of our ability. No one can guarantee the future. Look, all the craziness we've traded in 2025, we have still mustered up 90+% wins, which is pretty amazing. There's always risk and loss when trading. This is why there is a system, a process. This is why risk is always important. Risk management is what helps you survive. Risk management is what keeps you